This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to discuss the market trade action that we saw on Monday, we have plenty to take a look at. He is with Professional Ag Marketing, our friend Mike Miner joining us today. Mike, good to have you back on the show, sir. How are you?
I am doing great. It's been a while. How are you doing?
Hey, I am doing good, Mike. Appreciate you taking a few minutes to jump in with us here today. And, we picked a Monday that you and I were chatting, weekend headlines, of course. I pick a Monday for you to be on when Russia-Ukraine's back in the news. Just your thoughts in general, man. This whole situation, we know it's a not good. It's a bad one. We continue to pray for folks over in Ukraine, but the impact it's having on the market trade, just that volatility really just running back in here. And we saw wheat really shoot up to the upside. Just what are your thoughts on the impact here of this situation on the markets right now?
Yeah, I mean, Russia coming out said it would suspend participation in the export of ag products from Ukrainian ports in response to the attacks on the Black Sea. They blamed this on a few of those anyways. And I think it was a pretty good excuse for them to try to do it. The deadline was on the 22nd of November that they were shooting for. So honestly, I think this gave them the excuse they've kind of been waiting for. But we were talking, it seems like all of these Russia-Ukraine headlines continue to happen over the weekend, and it's made Sunday nights and the overnight going into Monday extremely volatile. The last couple of times we've had this occur anyways, we saw it again last night. And most of the time we've seen this happen where we see a day like today where Chicago is up 53 cents on the December close. It seems like it happens for a day, and then it kind of backs off and it tries to take some of that back. I'm going to be interested to see if we do that again here in this wheat market and try to pull back some of these gains over the next couple trading days. I do believe this is a little bit different fundamentally in nature. I do believe that Russia advanced too quickly into Ukraine. They got some of their supply lines shut off. They had to retreat back, and now they're using this opportunity to take out things like infrastructure. And going into winter now, which most people wouldn't realize, I think, that we are going to be fighting a war in a cold country. And that's not very normal compared to what we've had over the past few years with the past wars we've had. And it's very tough in winter time frame. And I think Russia is planning on taking advantage of that, bombing infrastructure, taking out heat supply sources for power, taking out water, things like that, making it a really long winter for Ukraine. So I really think that they're playing the long game here, and this is just the beginning of the Russia-Ukraine headlines.
Well, I know as well with the wheat market pulling corn and beans higher with it on Monday, and we think about harvest getting close to wrapping up here in the U.S. and the impact the situation's having on the quarter bean markets. $7 quart, $14 beans has been overhead resistance for a while, Mike. Your thoughts in the quarter bean market, and also part two to that question, just your thoughts on the cash side, because I know basis has been firming up in many areas right now.
It seems like basis is going to have to do the work on corn. December futures went up, hit $7 again, failed to break through that level. That continues to get watched, along with soybeans closer to the $14 range. It's hard to get bullish corn from $7 up. So it seems like basis, in especially the Western Corn Belt where we're at here in Laverne, is going to have to do most of the work here going forward from these levels up. And, when you start getting east, you have a lot of different scenarios. You have way better crop yields, even in eastern Iowa and western Illinois. And then you've got a river problem over there, which is going to occur all the way through the winter, it looks like. So you're getting backed up a little bit over there, still seeing some more aggressive basis levels in around that Cedar Rapids area, starting to get, into the positive area finally on this cash basis on corn, where over here you're seeing areas 40 over, south of us. So it'll be interesting going forward, but I do believe out of the two, you're going to see corn continue to hit some resistance levels here around $7 futures, and then basis is going to have to do most of the work from that point on up.
So as you work with farmers in your neck of the woods and farmers across the corn belt, I mean, are you hearing a lot of folks? Are they taking a lot to town right now, or are they putting a lot in the bin and locking the door here for a little while? I mean, what's the move right now, Mike?
In an area like this one, you saw a lot get put in the bins right away. However, a big part of that was just because we had smaller crops in the area west of us. So a lot of those guys were able to fit it all this year. However, we've had fantastic cash prices. We've had $7 cash corn trading nearly all fall, and you've had dry corn, and that's pushed a decent amount of bushels into the supply chain here for some of these mills and ethanol plants. So we are seeing that a little bit, but the farmers' bin doors, once they get shut here after harvest, which is quickly approaching in this area, you're going to see that pretty hard to pry away from the farmers' hands. And I think that's where basis is going to get going pretty crazy here over the next few months on corn. Soybeans, I think you're seeing a really strong lead in the rail market here most recently, but you're also seeing processing margins $3.5 to $5 a bushel on soybeans. That's just nuts. So you are seeing the processors incredibly aggressive going forward, and we're seeing some really nice basis levels on soybeans get traded recently, and I think that will continue here for a little bit. But as a farmer, I would really be trying to take advantage of good soybean basis levels here this fall and winter, because it costs a lot of money to store soybeans going forward the rest of the year with high interest rates, and just carry cost is going to be crazy, especially if the market isn't going to pay you to do so.
Mike, you watch the hog market quite a bit. I'd love to talk to you about the rally we've seen there recently. I mean, it's been a pretty strong rally. We maybe saw a little consolidation here towards the end of the month of October, but overall, it's been a nice recovery. Monday's trade deferreds look good. I know front months were down a bit, but just your thoughts in this hog market and how this rally has been here as of late.
Yeah, we've hit some more resistance levels on the hog market as well. Hog slaughter remains really strong, outpacing the previous week, previous year. Packers will need to be aggressive again to keep up with demand here in the near term. So that's been a fundamentally strong item. You've had a higher close in cash hogs there at the end of the week last week, still getting cash market to hold pretty decent on hogs. However, you are starting to see some cutout levels products start to slip a little bit, and going forward, that is a nearby some demand concern. I would be worried about that going forward a little bit with where cutout currently is and what we're paying for cash. We're going to need to see one of them try to give a little bit to the other here for the Packers to stay too aggressive going forward. And I think with where we see some of those summer margins at right now, that's where I'm starting to get excited again. We're starting to see some really nice things next summer and starting to see some more high levels in those crush margins into the next summer. So that's where I'm going to be focusing a lot of my energy here in the meantime, is around those summer months.
Mike, how about the cattle market? I know we were down a bit on Monday with higher corn prices, and that was an obvious wait, but any thoughts on the cattle side of this protein sector as we move into the month of November?
A day like today, you're going to see it pretty well. The strong increase of corn prices there on our overnight, that obviously puts a lot of pressure on the entire livestock complex. So when we start talking about some of that, you really gotta put that right in the beginning. Otherwise, cash is expected to be higher again this week, and as demand stays strong here, for now anyways, the Packers will need to still be pretty aggressive going forward and maintain a higher slaughter pace. And fund traders are increasing their net long futures finally, their positions there, as much of the market's really indicated a bullish stance on this market longer term. And the funds have taken a really hard, long time to get behind this cattle market. And we are starting to see that a little bit. And I'm going to be interested here to see how aggressive the cash market is in the next near term with how aggressive they've been in the cash market recently. They usually like to be on a week and then take a couple weeks off and try to pull things back lower. So that's what I'm going to be following here this week and next.
Well, Mike, great stuff as always. Before we let you go for the day, any final thoughts or anything else you want to reiterate for us here today?
Yeah, I want to talk about how volatile the month of November could be for these markets going forward. You're looking at a lot of different scenarios that we're not really used to. So on Friday, I had been talking about the Russia Ukraine deadline coming up. That just got solved a little bit quicker than I was expecting it to be. That'll continue to be volatile going forward, obviously, but that was one of the headlines. And then you have the Fed coming out. You're going to have an outlook from them coming forward as well for this week, and see how aggressive they plan to be after this next rate hike. And that'll be the one we're really looking at, right, is what their further outlook is. And then on the 8th, you've got midterms, and on the 9th, you've got a WASD report. You're just going to get a lot of stuff here in about the beginning of November. I think that could be really interesting in these markets.
It's a lot to take in. It's a lot we're going to be watching very closely. Mike, if folks want to talk to you and the team there at Professional Ag Marketing and get some advice with their marketing plan, how can they get a hold of you?
Yeah, go to our website at professionalagmarketing.com or give us a call here at 507-449-2030.
With that, Mike Miner, Professional Ag Marketing, we appreciate the time, sir. Thanks for joining us. We'll get you back on again real soon. Have a great one, and we'll talk to you again real soon.
Thanks, Jesse.